Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first scenario where we're looking for a three-wave structure to the upside in a W, a wave X, and then a wave Y, a double zigzag. In this scenario, we are then working on this yellow wave X, and inside this wave X, we are looking for a three-wave corrective structure in either a wave W, X, and then a wave Y, or a bigger wave A, complex structure in a wave B, and then a wave C to the downside. So in both scenarios, we would eventually top out and expect a move towards the downside. Now inside wave X or wave B, we are then looking for a complex structure to the upside, which starts with a flat in this wave W over here. Now the probabilities at the moment are highest for this structure over here to be a flat structure, in particular this move towards the upside. Reason for this is that this range over here is very long, and this being a wave 1, wave 2, and then eventually a wave 3 to the upside is very unlikely, as this wave 2 is incredibly long, and even for an A, B, and then a wave C, this range is very long, but I will talk about a bullish scenario coming up next. So in this scenario, we're looking for a flat in W, then we have our wave X, and then we look for a wave Y, which in a double combo structure is then a zigzag move, after which we expect a move towards the downside in a wave Y or a wave C to finish this wave X. Now if we look at the levels around price, then we do have a daily over here that we have touched at 68.5k once. We might test it again over here. Just above, we have the daily naked point of control at 68,950, and then above that we have over here a daily naked point of control and the point of control of this big range hovering around 69.8k. So these are a couple of important levels to the upside which might act as resistance, because in, of course, both of these scenarios, the WXY to the downside or the ABC, we are looking for proof of resistance if we are thinking about a turnaround and a move towards the downside, right? I don't catch knives, we don't FOMO, YOLO, or catch knives on this channel. We trade based on information coming in, unless catching knives is your plan, of course. And I want to see, personally, I want to see proof of resistance or proof of support. The second scenario is the most bullish scenario. In this particular scenario, we are looking for this move to the upside to be a wave 1. So it's an impulsive structure. So now it's not part of an ABC where this is a corrective move. Now it is an impulse to the upside, and this is the corrective move to the downside. So here we are looking for a wave 1, 2, and then a diagonal in a 1, 2, and continuation to the upside. Now there's a couple of problems with this scenario which does lower the probabilities. First of all, if this over here is a 1, 2, then it pretty much means that this over here has to be a double 1, 2 as well, in a 1, 2, 1, 2, and then another 1, 2, 1, 2. So you have 4 1, 2s after another, which is incredibly rare and lowers the probabilities. Also, if this is a second wave 1 compared to this one, this second wave 1 is a lot longer in price and time compared to the first wave 1, which is also less common. If we then zoom in here and we are looking at this diagonal, then this is an expanding diagonal, which also again is very rare. The most common diagonal structures are contracting diagonals. This is an expanding diagonal, as wave 3 is longer than wave 1. Can be shorter wave 3 if you have a different pool, but in the end wave 5 is longer than wave 3, so it becomes expanding, and that is a low probability diagonal. So that also impacts this scenario negatively. The invalidation for this scenario is price breaking this low over here. Also, we have to remind ourselves that it is still a weekend, so preferably, at least that's most common, we continue to range inside this weekend time frame, so today and tomorrow. In this scenario, we would then expect after wave 5 to go down in a 2 and then up for a wave 3, preferably then next week. But then again, this scenario doesn't really have the highest probabilities at the moment. And then the number 2 on the list for me at the moment is this particular scenario where we have our second WXY, but the wave X is counted a little bit different. So inside this wave X now, we again have our wave W ending over here, but now we have wave X already finished. And that is the difference compared with the first scenario I've shown, where we are potentially still working on the wave X or the wave B higher. So here we have a finished wave X, and we are then looking for an internal WXY or an ABC. Now, as you just noticed, I made a mistake, but that is on purpose because a little bit of education. In this wave X, right, the subdegree count is a W, X, and a wave Y, right? For a flat in an A, B, C, we need price to go higher. So we're looking for a W, X, and then a wave Y. X is already in, we're looking for Y. A W, X, Y in blue is not allowed in a green wave Y. And that means that I have to remove this from my chart, which leaves the flat scenario where we then have a wave A, wave B, and a wave C. Now the minimum target for a wave B in a flat is the 0.9 Fibonacci, and the 0.9 Fibonacci, if I zoom in, right, has just missed out on being touched, right? So actually for a flat, we need price to go a little bit higher, and preferably, most commonly, we have a regular or a expanding flat, and an expanding flat has the most common target for B being between the 1.236 and the 1.382, and that then gives us a target which is between 68.9k and 69.2k. That is the most common flat target. An expanding flat, less common flat target is the 0.9 to the 105, which is just above price, as you can see. After that, we would then expect a move to the downside in this wave C, which should be an impulsive structure, 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5, to finish wave Y, therefore finish wave X, and then we expect a move towards the upside. Now, if you have kept up to date with my videos over the past couple of days, then one of the scenarios that we're keeping an eye on is a triangle in this range. And the scenario that I showed at the beginning, meaning this one over here, WXY, as well as this scenario, right, WXY, only wave X is different in both scenarios, they fit with one of the two triangle scenarios, which is this one over here, where we have our wave A, wave B, wave C already finished, and we're working on a wave D, which then is a WXY structure, after which we expect a continuation of the range in E and eventually a continuation to the upside to continue the bigger trend, as on the higher time frame, as mentioned in the live stream earlier today, as well as the previous video of this morning, Central European time. The probabilities on the weekly and also the daily time frame are highest to continue the trend at a later stage if we are finished with our range over here, right? So this is currently what I'm looking for with regards to the scenarios very, very locally. If we then look at the CVD divergences, then the CVD over here have some bullish and bearish CVD divergences. The bullish CVD divergences that you see over here have already played out. The bullish CVD divergence here had this high as a target, got taken, as you can see, and this bullish CVD divergence had this high as a target, also has been taken. Now we have this bearish CVD here, which is on the yellow line. As you can see, we have over here a lower high on price, but a higher high on the yellow line. However, as this yellow line has been progressing during the day, it also showed some bullish CVD divergences on the very, very low time frames, like the 3-minute, for example. And we also see something here. You can see a higher low on price. Let me do it like this. Higher low on price, but a lower low on this CVD, which is a local bullish CVD divergence that you see over here on the 5-minute chart, where the target is this high. And if this high is going to be tackled, very likely this high is going to follow suit. Now on the 5-minute, however, this is the 5-minute chart. As you can see here, left, top, right, we have this bullish CVD divergence, but also on the 5-minute, we can see a bearish CVD divergence with this high and the lower high. Now it's only visible on the 5-minute. I personally prefer the 15-minute a little bit more. 5-minute is a bit like scalping, let's say. But we do have a bearish CVD. So we have a bullish CVD locally and a bigger bearish CVD, and we have to keep in mind both of these. But it does fit with the potential narrative of still moving towards the downside in either this scenario, right? W, X, or B, and then a wave Y, or actually with the bearish CVD, you don't want to see this high taken, so then you want to move around earlier, right? Or this scenario here, where we have our W, our X is already in, and we are looking for a wave Y to the downside. So this is important with regards to the CVD divergences. So if we then look at the probabilities of these three different scenarios very locally, then the probabilities at the moment are highest to continue this range, but mainly actually to have a move towards the downside. That is what we, based on the scenarios, would be looking for. It took me a while to actually figure out a little bit what is happening here, but the probabilities at the moment are highest for this move to be a wave C in a flat structure, and therefore if this is a flat structure, this move to the upside, everything that follows is corrective, and we expect a move to the downside either in an X and a Y or a B and then a wave C. So even if price is going to climb in the short term, one would expect a move towards the downside afterwards. This is at the moment the highest probability Elliott Wave scenario. It's on position number 1. On position number 2, we have this one over here where X is already finished, and we are going to be looking for a flat structure where preferably we see this high taken. And on the final spot, we have the multiple 1-2 scenario, which at the moment makes the least amount of sense pretty much. So this is what I wanted to say in the video. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.